Hey, what's going on, team? It's Ricky with Tech Solutions, and I wanted to kind of do a midweek recap when it comes down to a lot of the questions that we've been getting, especially for natural gas. So I'm just going to quickly break down 4 stocks. I'm going to give my opinion on their current pattern, what I expect to happen, and just perform a very simple technical analysis. If you're new to trading, one of the things that I do want to share with you is we did create this very simple, little pattern basics. If you've kind of been struggling to identify patterns and understand like kind of head and shoulders, double bottom and stuff like that, it's just like a little cheat sheet. If you guys want to download it, it's going to be page 4 on your ETF cheat sheet. And if you guys haven't downloaded this, it is absolutely for free, and that's going to be that first link down below. So I hope that you guys can use that little cheat sheet and it can get you one step closer to having a better understanding on how to read patterns. So let's go ahead and get right to it. Instead of looking at the 1 day, 1 minute chart, I wanted to talk a little bit more about overall direction. I know a lot of people might focus on day trading, but I know not everyone has that same focus. So I want to make sure that we take that into consideration. One of the things that I've noticed with crude oil itself is that it's been all over the place. There's no question that right now crude oil is overbought, but it's been so bullish lately that it would not be such a surprise if it just continues to rally. There's not really a pattern that I would really focus on with this one. There's been a lot of news, a lot of fundamentals that's been driving the price up. So on the technical side, I don't know if it would be as useful. There is no question when looking at it at the 180-day 4-hour chart, looking at the RSI, looking at the MACD, it is overextended and overbought, so it's no longer a good deal. I wouldn't suggest right away just focusing on DWT, which is the inverse ETN. And the reason why is that crude oil is infamous for just continuing to rally. There's continuous news and continuous fundamentals that will drive the price up. Trust me, it will not pull back, right? So let's be patient for this. Let's set our alerts. It would be great if it does pull back, as we do have a lot of margin for this thing to correct itself. But one of the things that I want to make sure that we share within this video is expressing the importance of, not a hopeful trade or not a hopeful swing trade, but making sure that it makes sense. It does make sense that it's overbought and that it can pull back, but it doesn't mean that it has to. So again, let's go ahead and move on to the next one. So I did want to talk about this one because a lot of you guys have a focus on the overall market, not because you trade, SQs or TQs or anything as in these futures, but a lot of you guys have a lot of money in, blue chip stocks. So one of the things that I wanted to cover is the overall direction of the S&P 500. So one of the things that we are seeing, and let me know in the comments section if you guys agree, is that the overall market has been actually doing very well. It did pull back a little bit this week, but because of that pullback, again, old support levels or old resistance levels can become new support levels. And you guys can kind of see that happening right here. It doesn't mean that it actually has to bounce here, but if we get a little bit closer, and I hope that you guys could see this in your screen, let me make this a little bit smaller. You can see that it had a previous resistance right here, right around 3,100. It pushed up, it made new highs, it began to pull back, and now we're seeing a lot of consolidation around this general area. The RSI looks decent, the MACD looks decent, but we're not making higher highs just yet. So again, if you're so certain and /ES or the correlating ETFs are something that you are waiting on, again, it would make sense, right? I think that we can all agree that it would make sense for this thing to continue to rally since the direction has been so bullish, especially after this little correction. But just because it's done it before doesn't mean that it has to happen. So again, if you're really trying to, stay disciplined, I would really test your patience. I would set your alerts, wait for that confirmation of higher highs. And one of the things that I like to do is once we get that confirmation, we don't know if it's going to continue to rally. So I like adding, very small positions. So like, let's say I plan to go into this with $10,000. I'll first go in with it for, $1,000 or $2,000. And if it continues to indicate signs of an uptrend, then I'll average up instead of trying to average down, right? And if it quickly pulls back, then because my dollar amount is a little bit less, it's not going to be a make it or break it. I can quickly cut losses because the dollar amount at risk is so minute, right? So let's go ahead and move on to the next one. I'm going to set my alerts on this one very quickly for the break above the EMA line. So we'll go ahead and go here, but also just as much as it could go up, it could go down as well. And I definitely want to make sure that we set our alerts for that so we have a better understanding of where the market is heading. Now talking about gold. So if I were to ask you, how gold is currently trading. Is gold currently an ascending uptrend pattern or a descending pattern? And one of the things that I think that you guys can quickly say is, if you have any experience when it comes down to technical analysis, and even looking at this overall SMA line, this is this green line that you see here. My length of the SMA line is 180. That's just preference. It's not something that you have to do, but it's pointing down, right? And it's showing signs of a descending pattern. /CL, /GC has been making lower lows and lower highs. And again, this is a gold-based future. So gold has been pretty bearish the past couple of months, and that's because the market's been pretty bullish, right? So if this continues, as patterns tend to repeat themselves, but they don't have to, it wouldn't come as much of a surprise if gold continues to sell off, as long as we continue to stay below that overall SMA line. So one of the things that I would do is I would set my alert to see if we break below 1460, to see if we continue to make lower lows and lower highs as well, which would then be in favor not of JNUG but of JDST, which is the bear inverse ETF. So let's go ahead, and I just wanted to /NQ is very similar to /ES. So one was the S&P 500 future, this one's the NASDAQ future. So my breakdown would be pretty similar of waiting for the break above of the EMA line and waiting for higher highs. So again, I'm going to set my alert on that, and I'll set my alert if it also begins to make lower lows. I like focusing a little bit more on /NQ. That's just preference. It's not something that you have to do in comparison to /ES, which is the S&P 500. So again, that's 100% preference. Just because I do something doesn't mean it's the right or wrong way. It's just what I've grown to become a little bit more accustomed to. So the question that you guys have been most commonly asking about is /NG. And for those that are going to be asking, I'm looking at /NG F20. And the reason why is I feel like it follows UGAS and DGAS a little bit closer. But when natural gas goes up, so does UGAS. When natural gas goes down, then DGAS goes up, which is the inverse ETF. So I hope that you guys understand the correlation between that. But I was talking to the Learn, Plan, Profit, and Tech But Solutions group today, and one of the things that I brought up is that natural gas has sold off quite a bit for the past 2 to 3 weeks, right? It reached a double top, right? Or previous highs right around almost $3, right? So we can see that with /NG. It began to make lower lows. It began to get rejected by the EMA line. And all I'm here to remind you is that it pulled back so much. And for the past 3 days, natural gas has really not made aggressive lower lows. So we're really beginning to see some form of consolidation. It doesn't mean that it's going to push up, nothing like that. I'm just saying that if you were someone that was swing trading DGAS as natural gas aggressively sold off, it made sense because the direction was in your favor. Now what I'm here to remind you is that natural gas has a previous support of a lot of consolidation around 2.50 to 2.60, as you guys can see around this general area. This is normally where it reverses. It doesn't mean that it has to, it just means that it tends to. So because of that, all I'm here to remind you is that if you do have a swing trade position on DGAS, if I had a swing trade position on DGAS, I would be very careful with holding that overnight now, because we're at a critical point where I would be very cautious to hold anything overnight, as it could quickly change direction. I do agree that natural gas still has a little bit more to sell off if it goes based off of previous patterns, and there's no question that it's not even on the technical side. There's been a lot of negative news and overall weather forecasts that's been driving the price down for natural gas. But I'm just here to empower you and remind you to, when we're at such critical points, it doesn't hurt to be a little bit more cautious and just take it day by day, right? So if we do begin to see a change of direction, then we can simply then begin to focus on UGAS as it becomes bullish, and then ignore DGAS, or vice versa, right? If natural gas continues to sell off, you can still take part of that, right? But it just has to be intraday. And I just feel like that's a little bit safer rather than trying to hope that it continues to sell off. So let me know in the comment section what you guys think about that. Looking at the 180-day 4-hour time frame, you guys could see this previous support and this general area. So I just wanted to make it, aware to everyone that we are approaching this general area. It doesn't mean anything or nothing certain. It's just where I would choose to be a little bit more cautious. So I'm going to be setting a lot of my alerts to see if we begin to have a bullish run on natural gas, or if it actually begins to reverse. especially as we're approaching, again, the colder months. But we need to make sure that the weather forecast and the overall fundamentals are in our favor. Also, one of the things that I do want to point out, it almost kind of contradicts one another, but I did kind of talk about it. If you go on the 5-day 5-minute chart, a lot of you guys were waiting for consolidation on natural gas, and I did make a little statement of, natural gas really hasn't made lower lows for the past 3 days, and although it was aggressively selling off, again, for the past 3 days it hit lows of 2.57, and that's been the lowest price point for the past 3 days, even after the natural gas report came out today. So I just want to make sure that we play it safe. I want to make sure that you guys lock in profits, and that when things come to more of a critical price point for a potential reversal, that you guys are not in an open swing trade, so you don't end up getting in on the wrong side of if natural gas pushes up, hopefully you're not still in DES. So nothing wrong with locking in profits. And again, one of the sayings that we have is that no one goes broke by locking in profits. If you miss out on something, or if natural gas continues to sell off, again, there's always money to be made, and 5 years down the road, let's be honest, it's probably really not going to matter. So let me know in the comment section what you guys think about this breakdown. It looks like I went a little bit beyond the 10 minutes, so I do apologize for that. But I really hope that I earned your thumbs up. Again, just a quick little reminder, if you guys haven't downloaded your little free ETF cheat sheet, it's going to be the first link for you down below. This is on page 4. Again, this is absolutely for free. We just wanted to give this to some of our beginners, empowering you to become a little bit more familiar with very basic patterns that happen pretty often, especially if you plan to day trade or swing trade within the market. So really do appreciate you guys' time. I hope that we earned your thumbs up. Don't forget to join our free Facebook group. So after you download your free ETF cheat sheet, it's going to be the second link down below. That's our free investing group. We have over 231,000 members, and we'd love to have you as a part of the team. Also, if you want to get the option of being able to watch me trade live every single day, learn a little bit more about the Learn Plan Profit team, and see if it's a good fit for you. And again, that is that third link down below. Really do appreciate your guys' time. Wish you guys an amazing rest of your day. Tomorrow is Friday, so let's do our part in preparing and planning to end the week on a green note.